5, 4, 3, 2, 1.
All right. Good afternoon, everybody. Friday afternoon here at briefing.com. We're keeping an eye out on the markets. Definitely a volatile session. Bouncing. We saw it slip to multi-month lows here below that 50-day moving average. But it was able to recover, whip back, put on a little bit of a short squeeze for some of the market participants, but ran out of steam right around 38.55 in the S&P. And now we've just kind of been flopping around the 38.30 level as the middle range. So we will continue to watch this action play out as we move along in this segment, which is, of course, the week ahead. What we do is Scott and myself, we will take a look at some of the earnings that are coming up next week and provide people with some insight into what direction we see them, what some of the expectations are on the fundamental side of things, and if there's any trades setting up. So first, we will take a look at the macro, as that could certainly upset the apple cart here, particularly with yields. It's such a big player in the markets right now, given the rally that we've seen over the last 2-3 weeks in some of the longer end of the belly and short end too at this point. But over the weekend, we got a G20 meeting, and that should be of interest for people because you never know if there's going to be some sort of coordinated action taken by central bankers. We talked about it overnight. Bank of Japan and the Reserve Bank of Australia were both in the markets there. So it's a possibility for the ECB's Christine Lagarde to get involved. And, of course, the Fed Chair Jerome Powell is in close contact, and we're going to have Yellen meeting with the finance ministers of a lot of the main players at the G20 meeting. So it's going to be a big one to watch. And one of the other side items that we saw mentioned in the Financial Times article was the potential for a digital tax. Now, I'd be very surprised if they came to any sort of final conclusion outside of something in the language that's going to state that all 20 members support some form of digital tax. So this has been expected ever since Biden took over, that his administration would look to work a little closer with the other G19 members there and push something forward on this front. So there are two of the big items that we'll be looking for over the weekend. However, probably the biggest impact for the markets is going to come from the PMI data that's going to start coming out on Sunday night, with the Asian numbers, particularly China, getting a lot of notice. Remember, we get the preliminary looks, which is about 85% of the survey, from Japan, the UK, Australia, Europe, and the US. So really, China's kind of the unknown. And that's the biggest market mover by far, and that's going to be all out on Sunday evening. Moving in on to Monday, relatively quiet start outside of the PMI numbers. We will have a German preliminary CPI figure, and we want to keep a close eye out on that number just to see if we are getting a little bit more of a global feel for heating up on inflation. So that's going to be the big item to watch. UK is going to be out with some of their money supply numbers and mortgage approvals. We also are going to have some Fed speakers here in the U.S. early. We're going to have Williams and Brainard, arguably two of the top four most important commentators in the Fed, the other ones being Powell and Clarida, the vice chair. But Williams and Brainard are going to be out Monday morning, and you could be sure if there's any sort of overnight volatility on Sunday night, which there tends to be a lot of. I'll be around watching the markets here Sunday night and post if appropriate. But getting those speakers, I wonder if that's by design that they're going to have them leading off so early in the week, just in case the weekend volatility does ensue. Also in the U.S., of course, we'll get the final manufacturing PMI numbers out, as well as construction spend and the ISM manufacturing price numbers. ECB President Christine Lagarde is going to be speaking that morning too at 11:10 a.m. And then later on in the evening, we're going to have a jobs report from Japan, as well as their monetary base. Australia will be out with some building approvals and current accounts. And then the Reserve Bank of Australia is going to be out with their interest rate decisions. So again, going to be curious to see if central banks are in need of some sort of unified statement to ease bond markets. It's going to be the early item driving markets on Monday. Tuesday, German retail sales figures are expected, as well as their jobs number from that morning. The preliminary look at the Eurozone CPI data is due out at 5 a.m. And then moving back into the U.S. here, we'll get total vehicle sales as is usual at the beginning of the month. Lael Brainard will be speaking again, as will Fed Governor Daly at 2 p.m. that afternoon. Australia is going to have their construction index out later on that evening. And then we're going to get some more PMI numbers, this time on the services side, with the China Caixin number due out. Wednesday, service PMI numbers continue throughout the European region, as well as the Eurozone PPI numbers. Canada is going to have their building permits that morning. And then the U.S. will start getting some jobs numbers with the ADP non-farm employment change. Then the service PMI numbers here in the U.S. will be hitting the wires. This is, again, a revised number, so the preliminary numbers have already been released. And we will also have Chicago Fed President Charles Evans speaking that afternoon. And then we'll get the Beige Book, which might have a little bit more weighting than usual. This is, of course, released 2 weeks before the Fed meets and helps set the tone for what's expected in the Fed meeting. Australia that evening has the retail sales and trade balance, and then we got a 30-year bond auction from Japan that evening. Moving into Thursday, ECB minutes are going to be released, as well as retail sales and unemployment data from the Eurozone region. There is an OPEC meeting that day. This is the monthly meeting that they have now. So watching oil prices throughout the course of the week, see if they make any adjustments accordingly. We'll get the Challenger job cut numbers here in the U.S. that morning as well. And then we'll be moving on and getting the revised non-farm productivity and unit labor costs from Q4. Again, these are revised numbers, so don't carry as much weight. Claims data, of course, being Thursday morning, is out at 8:30. And then factory orders and nat gas prices, or nat gas storage numbers later on in the morning at 10:30 a.m. Fed Chair Jerome Powell will be speaking at noon. He is going to be taking Q&A too. This is a Wall Street Journal event. It's an online event. So the questions will certainly be interesting to see if Powell pivots from what we saw earlier in the week. And then moving on to Friday, more German data here with the factory orders number, French trade balance, Italian retail sales due out to that morning. And then we get a Canadian trade balance, and then the first Friday of the month. So, of course, we shall be getting the U.S. jobs number. Current expectations are for the non-farm payroll to rise about 133K compared to the 49K in the prior, and average hourly earnings are expected to increase 0.2%. So that's what we're looking at on the macro front. Then I'm just going to highlight real quick a couple of conferences that we should be aware of. JMP Securities, starting off Monday, is going to have their technology conference. JP Morgan has a global high yield and leveraged finance conference start on Monday too. So we'll be looking for any comments from there, given the concerns around yields and, of course, the leverage financing that we're seeing. BMO Capital will have their 30th annual Global Metals and Mining Conference that next week. So given my take on metals and mining, I'll certainly be paying close attention to that, but I'm expecting to see some positive commentary coming from the group. Cowen's going to be holding their 41st annual healthcare conference starting next week. And we got Credit Suisse out with an annual energy summit as well. A few other items of note. Morgan Stanley's got their technology, media, and telecom conference next week, as well as an energy and power show. Credit Suisse is going to be hosting their healthcare conference as well next week. Berenberg's got an industrial technology conference on tap. I was asked about shipping earlier, and we have talked about TK and a few of these other shippers in the past, but Capital Link is going to have their International Shipping and Offshore Forum starting next week. So a lot of questions are going to be around the current rates that are going on, as well as some of the supply chain issues and the backups that we're seeing at global ports. Look for that to be a hot topic there. And then finally on the conference front, Bank of America Global Securities has their agricultural and materials conference. Scott, before we get into earnings too, I just wanted to note a couple of investor conferences, and we can take a look at these charts too. But Eaton Corporation, ticker symbol ETN, they have their investor day on Monday. So just keeping a close eye on those shares here. Bumping up against a little bit of resistance at 134. Holding up pretty well considering what we're seeing from the rest of the market, though, Scott. You got any thoughts on that?
Yeah, super strong up channel here the last, 8 months or so off the March lows. Looks great. Absolutely looks great. Let's take a look at the long term. Yeah, long term, we're looking at all-time highs. So I like it. I like it a lot.
Let's see. We also have Agco, AGCO, which we've certainly seen plenty of strength in. Deere and Caterpillar and Agco is following right along here. Nice looking move. This is hardly even budged given all the concern we're seeing in the market. And just taking a quick look myself here at Caterpillar and Deere. I mean, Caterpillar and Deere had a little bit of, well, Caterpillar did. Deere's been stout, but certainly plenty of love in the Agco space. And again, that's why I like this APPH SPAC, Scott. But what do you think of AGCO?
That looks great. I just showed that chart there. I mean, this is probably, it's just phenomenal. You gotta love the fact that it staged this huge breakout about 4 or 5 months ago over the $80 area to fresh multi-year highs, and ever since then it's been in this 45-degree angle up channel, just rising above a 50-day moving average that's on the climb, and every dip and pullback below the 20-day moving average is bought right back up. I wouldn't be chasing anything at this point up here, but just look for those pullbacks to key support levels as potential buying opportunities. Trends your friend.
Right.
Yep.
And then the last one we wanted to talk about, Exxon Mobil, XOM. Obviously keeping an eye out on the dividend and trends that we're seeing in the oil patch. I would expect it to be pretty positive for the most front. But what do you think of energy's move today overall, Scott, and Exxon Mobil in general?
Well, ExxonMobil, it's been I would say it's almost been a laggard in the space lately. I mean, it has been rising with the rest of the group, but it's just getting up to the 2020 resistance area around that 55-60 area on this weekly chart here. And it has been struggling. Obviously, we've all known that energy stocks have been struggling for years now. The XLE itself, I guess there's somewhat similar price structure there, but it just seems like there's better, stronger names out there. The group has just been phenomenal here in February. I mean, pretty much since the get-go, it bounced right off the 50-day moving average, went and just pretty much one trend higher here the last 3 weeks. Got a little bit too far ahead of itself. You see some profit taking going into month end, but it is clearing fresh multi-month highs there. So I think you caught a trade or two in it. I caught the OIH off of the early Feb lows. We wrote this up for a solid, 15 to 20 points on that breakout there throughout February. Gavi, I think PXD was your pick, or
EOG was, which
EOG.
came.
Okay.
I ended up banking the rest for a small 2-point gain. We did have a nice move, but
Yeah.
it got caught up a little bit with that energy sell-off earlier today.
Yeah,
But it did hold 63, which was my entry, and I do like that possibly for another entry. So still on the radar.
I think they're all on the radar. They're all fair game. I'm glad that they started to pull back here a little bit, and I think you definitely have to watch them. Again, coming down to key support levels, prior monthly highs, old resistance should act as new support. Key 20-day moving averages, 50-day moving averages, they're all fair game going forward.
All right. So let's take a look then at some of the earnings next week.
Okay.
And definitely a pretty heavy retail theme going on, and also a lot of the high value software names that we've seen and tech plays. So it's going to make for an interesting week. I'm really curious to see if we can continue to see the reopening trade be able to push back against poor earnings reports and move higher, given some of the rallies that we've seen. It certainly felt like today, Scott, the reopening trade was getting taken a little bit back in at the moment. So it's something that we'll have to watch how they perform around the earnings. But it is going to be a little bit of a slow start to the week. There wasn't anything jumping off the page to me on Monday morning. Clear Energy, CWEN would be maybe an alt energy play that we could take a look at. This one is coming crashing down to its 200-day moving average, giving up a lot of the recent gains here as we see a rollover in the alt energy space in light of the higher yields. But outside of that, nothing was jumping off the page. How about for you, Scott?
Well, clean energy, CWEN, like you said, the 200-day moving average is right there. So that's going to be a key line in the sand just going forward for that name. So that could be an interesting one to say the least.
Maybe SSYS. That's
This
one of the 3D plays, right?
X-ray always shows up on my radar for some reason. This is more of a dental supply company, XRAY. Yeah, I mean, I would just kind of maybe look at this one. If things if it gapped down to the 50-day moving average down here, you might have a bit of a bounce. Maybe it breaks out over the 50-day moving average and it gets moving to the upside. I would keep that one on the radar. What else was the other one you said, Gav?
The SSYS, that's one of the 3D plays, right?
Stratasys. Yes, it is. Yeah, that's really the other one that would basically stand out there. Let me
and actually, that's kind of a key theme, too, because we're right after this, we'll pop into DDD, which is out after the open.
Oh, okay, cool. Yeah, that's definitely so this one, we all know 3D printing stocks. If we look at the PRNT ETF, this is an ARC-related 3D ETF that's been out very strong to start the new year, accelerating to the upside, almost too strong. You do see the ARC ETF, this PRNT, pulling back to the 50-day moving average right around this 38 vicinity. So that's going to be a key deciding factor for the ETF as a whole, which, again, it's kind of mimicking its components here. So SSYS, again, almost a parabolic-like move where it more than doubled in price the last 2 months and then came, crashing back in, if you want to call it that, but just holding right around this key 50-day moving average. So DDD was one you mentioned as well. Also another one. I think this one went up quintuple the last month. It's just time for them to pull back, and they've been doing that. They all look pretty good in this vicinity. They're all about, if I had to guess, they're all around 50% retracement. Off these run-ups. Yeah, DD's right there around 33 or so. Stratasys is probably around the 50% retracement as well. So, it's kind of a what's the word I'm looking for? Make or break point for these names. Are they really going to have these earnings that are going to, justify the strong run-ups that they had, or are they just going to go to the wayside?
Yeah, and the other interesting aspect too is it's going to be the first day of March, right? So you wonder where
money
will
flow?
where will money flow?
Mm-hmm.
Right now, it felt like we were totally getting the reopening trade that would just bleed into March, but then all of a sudden we got a little bit of a reversal here today, and I'm real curious to see which way that money flows starting in March.
Yeah, I'd also watch VJET, VJET, and X1, XONE. Those are the other two that. Oh, also Nano Dimensions, NNDM is also another one. Yeah.
Where's that pulled back to? I haven't seen that one in ages.
It's just
down at 979.
Yeah, so that's an interesting level for that one too. This was, I think this one was this an emerging growth focus list name?
I don't know if it was on the emerging growth. I doubt it would have the earnings for
I don't think the earnings. You know what? It was one of the zippers. That's why. It was one of the low price stocks that have been strongly trending higher. Yeah. Okay.
Yeah. So, but yeah, keeping an eye out on the 3D printing space. Obviously, is going to be something that you're going to want to do. So, Scott, we moved into DDD here. Next name up. Inseego, INSG. This was a hot 5G play, running into that same formula that we're seeing on with all the other stocks as that step back from the 20 level down to $14 here, trying to find support. Really the common chart that we're seeing from so many of these names at this point, right?
For the most part, yeah. There are a lot of pretty hefty corrections with stocks getting back underneath their 50-day moving averages, which is the red line here, which usually raises a red flag for most stocks and most markets. But it is holding a key support level here that looks around the $14 area. If I was to go out to, say, a weekly time frame, might be a little clearer. That 14 level was resistance back during 2020, broke out in the late portion of the year, and it's pulled back and checked back a couple times. So 14 looks like the line in the sand for Inseego.
All right. Mercado Libre is next there, Scott.
Mille.
This is one that's been getting chopped down as of late here with the rest of the tech sector. Some e-commerce plays getting pulled back to earth at the moment. You got any thoughts on Mercado Libre?
This one is usually a really strong performer after earnings. So you kind of have to just let it chill out afterwards, and then see how it behaves. And then usually you look at this long-term uptrend that's been in play here. You can kind of see what I'm talking about. This case here, it's definitely made a strong run ahead of time. It's breaking back below the 50-day moving average, the red line. It's coming into that key support level around 1600. So. Yeah, it's got to hold into this. It's got to hold in this area because if it starts collapsing below 1500, it could be going further to the downside. But I would look to pick up this one on weakness. It definitely seems to be one of those names that's very popular to scoop up when no one's paying attention to it.
All right. One other name too, a relative recent IPO, Lemonade is out, LMND. Out again, coming back to key support levels right around this 120 area, dipping below its 50-day moving average. Scott, anything on Lemonade, or is it pretty much run the gamut of what we're seeing in so many of these formerly high-priced names?
Yeah, they're all running the same way, Gav. They're all slipping right back underneath the 50-day moving average and then desperately holding on to some sort of recent support level. Like you said, 120-ish for LMND. Looks like the key level. So, earnings are pretty – these sales growth – these are a couple growth names you mentioned there. They're pretty solid on a lot of these too.
Yeah.
LMND, Melee, and Seago. They look pretty solid.
Yeah, I mean that's where we're kind of at on the calendar. Towards the end, you got a lot of names that are seeing some good growth. Maybe not the profitability that some would like, but
Right.
That's what makes their valuation so tricky, and why we see that volatility.
Right.
NIO, NIO. This whole space, I see it being right in the spotlight again, given the March flows and keeping an eye out for where we're seeing things play.
Yeah, this one's definitely one of the hotter names. I would say right behind Tesla, that you have NIO as the next most traded electronic vehicle stock. $40 looks like the line in the sand. There was an area back in November and December that seemed to have held up really well. Again, it's questionable with these long-term uptrends broken and they're breaking below the 50-day moving average. There has to be a little bit of hesitation about the momentum that's in play here. So you're really just looking for it to get back moving to the upside, back above the 50-day moving average, or if it pulls back in below 40, it has to hold here. We'll see what happens overall. But again, another company that looks like sales growth is just phenomenal.
All right, and a name that we could talk about phenomenal sales growth, Zoom Video, ZM, has had some of the best earnings reports you're going to see the last couple of quarters as they've really thrived in this environment with COVID. But interesting chart, Scott, because it's been kind of bouncing around this 350 area really for the last 2.5, 3 months now. You got the 200 days starting to establish itself, and it's starting to test that. Now, is that going to provide support, or are we going to break down below? Some of that could be with the numbers. Now, they do have one more quarter before they start running into arguably some of the toughest comps that you're going to see out there, given the strength of their 2020 numbers. But you got any thoughts on ZM here as it starts converging between the 250 day?
I'm watching it. Let's just put it that way. I was actually trading it a little bit this year. I think we traded it for that breakout over 400 early in February. We had some nice money to the upside there. Took some profits into the December bearish gap. Then we were stopped out of our balance just recently, with the broader market correcting as well a little bit off those highs. But it looks pretty solid here. I'm definitely, the 200-day moving average is at 350-ish, and then you have these December, January lows lining up with the early September bullish gap. That's going to be the key line, deciding line in the sand. You can see I drew it on the chart there for me. I mean, it's difficult. It's so tough to say when you have just these accelerating sales, top and bottom line. And yet the stock is really kind of going sideways for the last 3 or 4 months. The question is, this really isn't any more a reopening trade, right? This was more of a lockdown sort of trade for everybody.
Yeah.
And so, granted, it's super expensive, if you're looking at just accounting ratios and whatnot. But I don't know. I think it's kind of here to stay in the future. I mean, I know everyone from colleges to schools to work environments, and everyone's using this. Now, granted, it's got competitors as well, but it's definitely seems to be here to stay for a while. So,
Yeah.
yeah.
All right. Moving on to Tuesday. Again, we talked a lot about retail, and here you're going to see a pretty busy morning of it. Abercrombie and Fitch A&F out. Nice steady chart there running up to 28.27 level. The big thing for the retail group is how well they're handling their inventories and are they able to finally start generating some traffic flow. Obviously, there was the re-lockdowns going into Q4, which made it pretty difficult. But now they start running into a little bit easier comps, and they're going to have to start showing some sort of improvement to get people excited, especially after the run that they've just had. A&F, for instance, rallying from $10 in August to the current level of 27.41. So, nice 174% or so rally there in A&F. So, Scott, you got any thoughts on this name and some of these retailers?
I mean, I wouldn't really be buying them up here at this level after
Right.
that run up, right? And then seeing that it's just coming into multi-year resistance around that $30 vicinity. Yeah, we'll see. We'll see how it happens. Even if it has a good report and they gap it up, it's just going to be banging right up against multi-year resistance levels. And just look at the behavior of this stock. It's not a very what's the word I'm looking for? Friendly trend up sort of stock. It tends to accelerate higher for a couple of weeks and months, and then it disappoints and rolls back down. So if we're in that phase of rolling back up, the next one looks like it's going to be rolling back down. So I'd be a little careful with this one as long as it stays below 30.
Here's an interesting name, Scott. AutoZone, AZO. We talk a lot about this around earnings
Yeah.
because usually it just keeps going up. However, it is now in a sideways direction, and you kind of have to look at the monthly to get a true feel for AutoZone. The
Mhm.
last time it went into a sideways correction would have been not so much correction, but sideways activity would have been back around that 2015, 2017 area. And then it did end up rolling over before finding some support. So what do you think about this one? I know we always joke that we always want to short it and we always get killed doing it or
Mhm.
whatever.
Mhm.
But you got any thoughts on AutoZone here, either as a trade or long term?
I think it's one of the strongest charts over the last 10 years, easily. It's one of the most least talked about stocks over the last 10 years, but it's also relatively thin. The average daily volume is less than a quarter million shares, so I believe the float is really small as well. I think, let me just take a quick look at that. Yeah, it's like a 22 million float. So it's always funny how you find these. How would you classify this? As a mid cap, I guess? Yeah, I
I
guess
guess
so.
so.
But like this, and this one kind of reminds me of Samuel Adams, SAM. Uh, these names just kind of grind higher year after year after year with no real volume behind them, but somehow that everyone knows the companies and they just keep going up and stuff. So this one, sideways range the last couple of months here. 1100 looks like the key support level, so you got to watch that. 1250 to 1300 is going to be new high territory. So it's just kind of range bound right now. I wouldn't really predict which way it's going to go, but it's definitely a long term, winner for most part. Yeah.
All right. Next up, a name that we usually want to address, but it was caught up in the GameStop crowd rally in late January. That's Chico's CHS, 111 million float, 9% short interest. They saw sales declines of 27%. Comp store sales declines of 24% last quarter. So obviously a difficult environment for Chico's. What do you think? What do you think of this name? It could be a hot one on the trading radar, given that it is a Reddit name.
I was not aware that it was a Reddit name, but I guess
Yeah,
all
it was
right,
one of
there
the
you
ones
go.
that got caught up.
This
Well,
this looks
we-
pretty good here the last 3 months. You see the 50-day crossing back above the 200-day moving averages. Think trends are going higher. Probes to fresh multi-month highs above three, at 250, I should say, have been happening. It seems to be holding on to some of that uptrending action. So it's not the worst looking retailer out there. I'd probably be more inclined to go after this one than Abercrombie. But it's just again, it's not my cup of tea to go after this sort of name, but I would definitely keep it on the radar. It could be worthwhile just around earnings. Yeah.
That's always my goal, Scott, not to be the worst looking one out there, right? Let's move on to Kohl's. We saw initially a pretty good response to the Macy's report here. It has rolled over since. So Kohl's, for its part, also popped up higher when Macy's came out with the numbers, and again, it's been rolling over, but finding a little bit of support down at that 53.40 area. And really, it's been able to hold above 54 since that pop above on February 19th. And just taking a quick peek here, I didn't see, there was an activist investor that got involved with Kohl's. So that might have been the primary reason for that pop, perhaps the idea that they would be selling, and the move above the 50 psych obviously helped on the technical level. But just be aware that there is some activist discussions going on in the backdrop here.
Yeah, so here's a monthly chart of Kohl's, and I just kind of looked at where this stock has rebounded and stopped over the last 15 to 20 years or so. And it just seems like 45 to, let's go with 60. I can move that up a little bit. 45 to 60 is that zone that seems to be a key inflection point. So it's smack in the middle of like the highs and the lows and stuff. So it's really, I think it's difficult to determine. It's had a heck of a run here the last 4 months or so. My guess is that it's going to slow down a little bit here around 60, just shy of 60, I should say. But it did make a constructive move, so I like it above 45 overall, but I think it's going to slow down and struggle here around 60. On the daily time frame, again, just a phenomenal looking move here on the short term, just riding above a rising 20-day moving average. Looks pretty solid, yeah. So 45 actually comes in with the 50-day moving average too, so that's a good one.
All right, next up, C Limited, ticker symbol SE. This has been another hot COVID name, digital entertainment, e-commerce, and financial service platform based out in Asia. It provides digital entertainment platforms for access to mobile and PC online games, as well as esports operations. It's been a darling of Wall Street. I know J.P. Morgan was out just raising their price target yesterday, actually, or no, Wednesday, to 283 from 248 in front of these earnings. Stock got up to 280 before seeing resistance, and it's been rolling over, but coming in to test its 200-day moving average at the moment. Scott, any thoughts on SE?
Yeah, my thought is, why have I not been trading this stock? Because it's got plenty of daily volume, a couple million shares, got a beautiful steady uptrend above a rising 50-day moving average. Every pullback to the 50 or underneath the 20 has been bought up recently. Yeah, this stock looks phenomenal. Of course, as I say that, it might end. Isn't that always the case, guys?
The Barron's 3000 call coming right here from Scott.
It looks great, though. I mean, really, this is just like text. If I'm going to write a textbook, this is going to be one of the examples, just of 50-day moving average trend. So, looks great above 220 right now, 227.
All right, next up, we got Target TGT. One of my long-term holdings were in this one from the 70s, Scott. So pretty nice return here, but it is looking a little bit heavier these days. We've seen that with some of the big box stores. Mm-hmm. Obviously you're going to want to keep an eye on Costco and your BJ's. I mean, Costco looks real scary right here. Yeah. But then again, that means I'm going to be eyeing that up for a buy, because I don't think I've ever been in a store kind of like Costco where I just think everything's so amazing. Maybe I'm just a gluttonous SOB, Scott, or something. But Target, though, that's starting to show some signs of cracking here. One thing of interest, they had mentioned yesterday they're going to be opening up some mini Apple stores in about 17 different stores. So kind of curious to hear more about that. I think that's interesting, but I don't know if it's going to really arrest some of the selling pressure we're seeing in these names. It's just falling out of favor.
Yeah, a little bit. I mean, the earnings are there, top and bottom line is there. So, I mean, that explains why the technicals have been so strong, just stair-stepping its way higher the last few months. It, it's right around the 50-day moving average. It has lost some momentum. Costco hasn't helped. Walmart rolling over a little bit hasn't helped it either. Um, maybe it's time for them to pull back and hesitate a little bit, but they all do look phenomenal still. I'd say let's go with we're going to go every 10 points here. So why don't we just do the highs over here, which come around 180, and then we got the 170 level coming off the December lows, and then I'd drop down to say maybe 160-ish, and then 155, 153 with the 200-day moving average would be key. It's funny you mentioned Costco. I just went to go grab some lunch with a friend, and we were just stating in our conversation how even the food at Costco is amazing. The steak and the
It really is.
fish, and you have to get it in bulk, and you got to freeze it, most of it. But they make everything from my underwear to fantastic food to everything. It's a little disturbing, but it's all good.
Especially in the same sentence there, Scott. I don't need to hear about your underwear and food in the same sentence.
That was the point.
But yes, it does highlight how wide of a variety they have in your TVs and your couches
Totally,
and
yeah, and it's all
and your
quality. That's amazing.
pharmaceuticals. Yeah.
Yeah, that Kirkland brand does an amazing job. So
Yeah,
even
I don't know if they're coffee pots though. I gotta say.
yeah, I'll give you that. Walmart's an interesting level too. If you're looking at that 130 levels, interesting.
Yeah.
And then BJ, we've talked about this one multiple times, pretty much since it made its debut. BJ Hulk Club, they basically, we said that if Costco was doing so great, then you should be picking up BJ for your long-term portfolio. Ever since they made that debut, and it's just been doing a phenomenal here over the last year or so. Finally starting to break out to, new high territory. I think this one still is a name that you can easily look at buying on dips if it does break underneath. If it reacts poorly to Target's earnings as well as Costco a little bit, but the whole group, I think if it comes back, they come back in a little further. I'm going to be looking, sizing them up again for a long.
Agreed. Agreed. Moving on to Tuesday afternoon, we got Ambarella, AMBA, which is moving into a pure play computer vision company and been another hot name. But again, we're seeing a lot of these LiDAR type visual sensor companies really coming back in. And Ambarella, it's testing some trendline support. It's going to be a big report for them.
Yeah, I mean, phenomenal move here the last couple of months, just racing all the way back up to where it was hot back in 2015. I think I unfortunately still know somebody that owned this thing over $100 back then, and just basically riding it out for the last couple of years. Finally, I guess it's paying off. Who the hell knows?
I always love when people do something like that. It's like, I'm back, baby. I'm up 1% over 10 years.
But yeah, I mean, you got some decent levels, and it is doing all right. But yeah, I love stocks that come back to all-time highs. It's a sign of strength and renewal. Whether it can maintain that remains to be seen. Right now, I would say just monitor that 50-day moving average around 105.
All right. Another key name, Fubo TV. Scott, we've both been positive on this name. It's gotten beat up with the rest of the group, dropping below the 50, but it doesn't look like it's done with that fight around 50, although it is looking a little precarious here. This is a name that I'm watching closely to jump into, but I just don't know if the momentum behind the streaming space is kind of left for good right now. I think it's just a little bit of a pause here, but what are the levels you're looking at Fubo that would get you excited?
Got to get back above the 50-day moving average. That's around
Right.
the $40 area. That's always been my deciding line in the sand for a lot of stocks when I don't know what to do. Below the 50, I am very cautious. Above the 50, especially unless it's like a valuation play or a long-term investment, it's a different story. But but for momentum growth names, the 50-day moving average is like the go-to holy grail for a lot of these stocks, whether they're going to be surviving the next couple quarters or not. So right now, this one has slipped below the 50-day moving average at that 40 level. It is a low floater. I believe it does have a high short interest as well. So the squeeze potential could be there. I would be willing to, trade a gap up over 40 and maybe, get some sort of squeeze generation going. But otherwise, if it fails, probably not going to touch it.
All right. Next up, we got two department store plays, Nordstrom's JWN at the high end, and we got Ross Stores, of course, at the low end. Ross Stores seen a little bit of a rollover here following the TJ Maxx report earlier on the week. JWN holding steady. We just talked about Kohl's earlier too. What do you see between these two names on a technical basis? I mean, I prefer Ross and TJ Maxx on the fundamental basis. Of the two charts between JWN and ROST, which one would you be buying, Scott?
Why don't we just compare the two? Let's take a look.
Yep.
So if I compare JWN to ROST, it looks like JWN has been the stronger performer over the last couple of at least 4 months at least, and seems to be maintaining those gains. So, just from a comparative basis, I would go with JWN. JWN is also it's above the 50-day moving average, around 34. Ross Stores is just starting to challenge it, starting to dip there, show some rejection already around recent highs. And like you said, it's closely related to TJX, which, hasn't really had a strongest response to earnings. So that's pulling back in also below the 50-day moving average off the recent resistant highs. If I had to choose between the two, I'd probably lean towards JWN as long as it stays above 34.
Okay.
Actually, I don't like it. I wouldn't go after either one of these though. I'm not really a big retail store trader. So,
Viva Systems VEEV coming into key support right around the 270 area. You also got the 200-day. This is basically the life science equivalent of Salesforce.com. So, which is slipped below its 200-day moving average. If Viva, obviously, if it fails to impress, it's going to be doing its own test of its 50-day moving average here, Scott. So you got any thoughts on this name?
260, that's the multi-month support level, so it's just below the 200-day moving average there. This is a little concern that it tried to get into higher ground over 300 earlier in the week, or at least late last week, and then it's really had the rug pulled out from underneath it with the rest of these markets, with the rest of the NASDAQ and software-related names. So 260 is the key line. I would just monitor that going forward.
All right. Moving on to Wednesday here, we got Brown Forman BF.B slipping below its 200-day moving average ahead of the print, Scott.
Yeah, that's not really a good sign. Yeah, be careful with that one. $70 looks like the key line in the sand if you go back a couple months to where it bounced off in the October low. But now it's coming back down to retrace that level. It's got a downtrend in play there. It needs to do something with this. It needs to get back up to over the fresh February highs, or that would be March, but it needs to just get moving to the upside.
Okay. Also seeing Disney pop into highs here. Is just seeing a headline that they have reached an extension with the NFL. It doesn't appear to be coming from the company, so let's just be a little careful of that, but that's what Disney's moving on here. Let's see. Dollar Tree, DLTR, Scott. Seeing some weakness here, but coming right into its 200-day. And then, of course, you want to keep an eye out on DG as well, which I always think is the better of the two.
Yeah, really a key level coming into play here for Dollar Tree, right around that 97 area. Lines up with the gap from early November. Definitely need to monitor that area.
Dollar General already underneath it.
Oof, yeah, that's not a pretty sign. That's which one of these bought out or merged with 99-cent store? Do you remember that?
I'm not sure which one did. I think it was Dollar General. Though.
Yeah, it used to be NDN.
Is this because they're talking about the wage increases? Everybody thinks that everyone's going to go to Five Below now or something?
Well, look at the Five Below stock. You're
15 Below? 15 Below is the new dollar store?
I just pulled up Five Below, and you know what? It's looking better than the dollar stores, so it's looking great. So
yeah, there you go.
I think you just answered your own question, Gaff.
Well, you got to think too that rising rates in a rising inflationary environment can't be good for these dollar stores if they can only sell everything at $1, right?
I don't think. Did they really sell everything for $1? I mean,
Everything I've ever bought in there has been $1.
I, I mean,
I'm not getting my food in there, mind you.
yeah.
But
I mean, exactly. I go in and I buy like
yeah, if I'm like having
paper
a party,
plates or something. Yeah, exactly.
yeah,
Usually
exactly.
stuff that I want to crappy silverware I want to give my guests.
Exactly. I just hope that they don't die of some sort of toxic poison.
People who really aren't my friends.
All right, so we got Dollar Tree. Not confirmed, but this was a name that I came across, Scott, just to throw out there for people. Kingsoft Cloud, KC. This is actually the top holding in the Sky, SKYY. ETF, which is all the cloud computing. So, but it's not confirmed, so we won't get too deep into that. I'm just seeing it mentioned. Wendy's, WEN. Any thoughts on Wendy's here? Obviously, another one slipping below the 200 and the 50, which seems to be a pretty common theme right now.
Hold on, Gav. I don't believe it that you're. Oh my gosh, Kingsoft Cloud Holdings is the top holding. I did not know that.
What do you think? Thought I was lying to you?
That's crazy.
Me too. I did not realize that was the top holding in the cloud ETF.
I was not. I mean, it was too much of an IPO recently. That's probably why. But that's crazy.
And that is the largest cloud IPO too. First mover advantage started in 2012. So, that gives it quite a legitimate entry there. So
good for them. That's awesome. That chart looks great, by the way, above the rising 50-day moving average. I like it.
Right.
$50. I got to keep track of that one. I'm sorry. You said Wendy's, WEN?
WEN, correct.
Yeah, I mean, you know me, all these stocks trading below the key moving averages, below the 200, below the 50, below the 20, and then they're in that order, that declining order. Yeah, I don't particularly like this. It's desperately trying to hold on to that psychological $20 level. Yeah, we'll see how that one plays out. Take a look at McDonald's too. That's been doing absolutely nothing the last few months as well. That's slipping back down to the 200-day moving average.
You mean the McPlant's not saving it?
I don't know what that is. Is it a vegetarian meal or something?
That's what they're going to be launching with Beyond Meat, the McPlant.
That sounds awful.
Right?
That's
what I wrote too this morning. I was like, I'm not ordering something called the McPlant. Unless I was smoking the McPlant beforehand and then I went in or something. I was really hungry. I was laughing at it. But, I guess it's going to be a big shame for him. But, yeah, McDonald's does look ugly.
Yeah. I gotta steal that. I'm totally stealing that line. I'm totally stealing that line this weekend when I talk to people. That's great.
Fair enough.
Yeah, I mean, I'm looking at all these restaurant stocks. QSR sideways, McDonald's sideways. Let's take a look over at Yum. Yum doesn't look so great either. I mean, going sideways here the last 3 months, struggling below the 50-day moving average. So the whole group and the whole sector doesn't seem too exciting these days. So, yeah, be careful with that.
Okay. Marvell, 5G play here, MRVL. Another one slipping below its 50-day, quite the common theme as we see everything being brought back in. So, Scott, MRVL, any thoughts?
It's right there. This is the uptrend line off the COVID March lows all the way to that October pullback low, and it's right there. So it's definitely precarious underneath the 50-day moving average. It looks very similar to what had happened the last two times that occurred. $45 was previous highs from prior months, so that should be coming into new support. So right in this area, it has to hold here. Otherwise, you could be looking at a drop back down to $40 near the 200-day moving average. What are they? Their top semiconductor, Marvell?
Telecom play.
Telecom
equipment. Yeah.
Okay, my bad.
Okta, OKTA, a cybersecurity play here. Pretty positive reaction to the Zscaler results at first, but they have since given up some of those gains here. But overall, I think that this cybersecurity crowd is holding in relatively well when you consider the rest of the market. However, this is another one that is slipping below its 50. Now, this is still within striking distance of trying to recover it. So.
I mean, but this is a phenomenal growth story here. I mean, they've been accelerating their top line for quarter after quarter the last couple of years, and then recently, just in the last 6 months, they've turned profitable. So there's just a phenomenal growth story. I think this one has been talked about a lot by us the last couple of years. By Trend
Yeah.
Tracker, I think has been following it. I'm pretty sure it's been all over the emerging growth focus list and whatnot. So with most of these growth names, again, you just as long as the top and bottom line acceleration is there, that pretty much makes each pullback and then pullback and then resumption back to the upside a good buying opportunity. So this one is in that mode right now, and I think you just want to see it resume back to the upside. I like it overall above 240 right now, if I had to say, like this little range here. Um, the deciding line in the sand at the end would be 225 at the 200-day moving average.
All right. Next up, we've got arguably the hottest IPO from 2020. However, this has been faltering as of late. Get ready for the snow is melting if we see this thing
Oh
breaking down
gosh.
headlines next week. Yeah, exactly, Scott. But this does look like a ugly looking chart, I would have to say. Just really at an unsustainable valuation. This is a cloud-based data platform, of course. However, I know Cleveland Research was out recently talking about these numbers really tracking well ahead of expectations. It's going to raise expectations for it. It hasn't been able to stave off the selling, of course. And 50 million float with a 15% short interest here in Snow. So could be one of the more volatile names next week.
Yeah, definitely be careful with it. If you wanted to get back, you want to just break away from this recent resistance levels from January and February, really get back above the 300 mark and start pressing higher to over 320. It's possible that could easily happen with a 50 million float. If it disappoints, you could easily be looking at a retest of the IPO lows below 220. I just think there's probably better names in the group out there too. I mean, this MGNI, a Magnite, I believe is in the same group gap.
Yeah.
And this one is just looking so much better and cleaner. I think you guys are long this
MG,
one, right?
yeah,
Damon
MG,
is, I think.
Damon, I believe, sold all his off at good levels here.
Yeah.
I do love it coming back in a test of 50. But no, that's more programmatic advertising, where Snow is more data analytics
Okay.
collection. So
Okay. What about this
not an apples
apps?
for apples.
Do you know what APPS? What about that one?
I don't know that name offhand.
Okay, that was a really strong one lately too.
Okay.
I'm showing that these are potential peer plays in the group. So, all right.
Okay. Let's see. SQM's going to be out to big lithium miner. It's been trading in a sideways direction, holding its 50. So right there gives it a benefit above any of the other names. And, another mining play. The XME is still well above its 50, by the way, if you're curious on that. But any thoughts on SQM, Scott?
I love it. I love stocks that go trending above a rising 50-day
Yeah.
moving average and then respond to them really well. So that looks pretty solid. I'd say, $50, the psychological 50 level looks like the deciding line in the sand. $60 does look like resistance. Overall looks good. The XME, if I show that here quickly, still phenomenal move. This is such a clean breakout in November above that 26 area and just been acting great. And this is a lithium play too. So
Yeah, so really their commentary might be more of an impact on that EV space than the mining space.
yeah, I would watch the lithium ETF LIT. If that's
Yeah.
the case. I'm not sure if SQM is a holding, and I'd have to go check, but I'd watch that one too as a reaction.
Okay.
Right.
And then the last one we'll talk about for for Wednesday is Splunk, SPLK. This is a chart. I mean, they've had a couple of poor quarters too, Scott.
Yeah.
Looking at it on a weekly, one more poor quarter, and I can't imagine that this is not going to test I would assume that this is going to test the 200 weekly moving average down around the 125 area.
Yeah, this is definitely a busted looking chart for sure. Yeah, let's see. I agree, Gav. It's just trading below all the key moving averages. It's so sloppy. I can't even really come up with a good level here. You said the 200 weekly. Yeah, around 124.
Yeah,
Sure, I'll give you
yeah.
that. Why not?
Sure, why not, right? Okay, moving on to Thursday here. We got Powell's on BZUN, China e-commerce play. Um, was seeing a little bit of a bounce up until about a week ago, and then just hit 55, rolled back over to that 46 area. It really needs to hold in here, Scott. Otherwise, it could just easily fill that gap back down to 38, 39.
Yeah, I agree. Nice move overall, to get the fresh multi-month highs there above that 44, 45 resistance area. And it's just, like you said, it's got to hold in this area. If you really like the story, I mean, if it does gap a little lower, it does have that 40 support level coming to play around the 50-day moving averages. So I would monitor that if you want. That doesn't look like the worst stock in the world out there, but very choppy overall.
All right, and we got Sienna, Cien. Oh, also, just so you know, that morning it's BJ's. We already discussed that.
Yeah.
So just be aware that BJ's reports that day as well.
Yeah.
But Sienna, Cien, another one falling below the 50, but does have strong support down below at the 250 psych.
Yeah, I'll give you that. The $50 level seems to be coming into play for a lot of stocks
Yeah,
overall.
right.
So pretty good mover there. Kev, let me just mention one stock here for late in the day. If anybody's looking for a trade, I've got a few alerts on this afternoon. OCGN,
Oh, yeah?
Ocugen. I was long
Yep.
this one. I think back when this was breaking out in the single digits in early February. But yeah, it's coming back on the radar here. It's been perking up here on some volume here, getting back over the
Cancer
$10
stock.
area. Yeah, yeah. I think is it cancer or is it COVID? I can't remember.
Cancer.
Okay,
Gene therapy.
okay. I think I'm confusing with
So, I don't
ONTX.
see any.
But,
I don't see any PDUFA dates at all coming up for him, so we'll keep an eye out on that.
all right, cool.
Kroger out that morning. Scott KR. This is one that recently rallied up to 40. I don't know if this. I mean, it's right around the time of the GameStop, but I don't think that this was a big short interest name. Yeah, it doesn't fit the profile, so I'm not quite sure what went on there, but that would be my initial assumption for KR, but it's since come crashing back down now below the 50 and the 200. So a lot of heavy lifting it needs to get back above.
Yeah, this is just kind of a choppy sideways range going on here. I don't really have too much of an opinion on there, Gav. You know what? The Ocugen name is related to COVID. That OCGN. It looks like
Oh, it is? Okay.
yeah. I think they have something to do with like distribution in India, if I recall.
Oh, yeah, you know what? They might have a deal with that Bharat
Bharat, you're right. On the
Pharmaceutical.
Covaxin.
Okay, yeah, I'm sorry. I forgot
Yeah.
that. Yeah, my bad.
Yeah, and it looks like it's getting some resurgence or something like that. So
Okay, maybe there might have been a headline over there. Perhaps they're,
yeah.
14 and a half hours in front of us here in Chicago. So, yeah, it'll be about 5 a.m.
Well, keep this one on the radar for next week, folks. The week ahead. I mean, you got a momentum name until
Yeah,
late Friday
yeah,
afternoon,
exactly.
breaking out from the resistance, getting back above from a single digit to $10 area. You're looking at potential next week's flavor of the week. Look at this on a weekly time frame too. It looks pretty solid.
Yeah. Okay, Schrodinger, SDGR. This is a popular trader among the team. This is another of diagnostic testing software that helps companies move drug trials through the process. So certainly a hot area. It's been a hot stock and it's held up better than most.
Totally. And it looks great above the $100 psych level, which was resistance back in July. So short term, that's the key level. If it does gap down a little bit, you got a 50-day rising 50-day moving average around 92, 93. That along the February lows, just around 90, 85 looks like a good support level. I mean, there's a bunch of different areas to kind of look at this stock for it to still maintain that upward trajectory. So I would really kind of watch for this one for sure. Low float name? Did you say that on SDJ or SDG?
I did not mention the float. No.
30 million. Yeah,
Yeah.
so you could definitely easily get a clean break above 115 at new highs as well.
Okay, here's one moving into Thursday afternoon, a name that I'm long that we've been pounding the table on. Chart still looks pretty good, although it's showing some signs of breaking a little bit here, and that's Broadcom, AVGO.
Yeah, I mean, semiconductors are hot. They've been hot for a couple months now. Uh, Almost too little too overheated. If I look at the SMH, they got a little bit too excited into mid-February there into new high territory. So you did have some sort of pullback action, but overall, the group looks pretty solid, and you have your leading stocks, including Broadcom, that are just helping pace the way higher above rising 50-day moving averages, rising uptrends, etc. So yeah, it should do well as long as it maintains that strength. I'd say above 440. Looks like the key level.
All right, we had mentioned this name earlier, Scott, but Costco, COST. Uh, Expecting good results from Costco still. Obviously, the comps are going to get extremely difficult. But again, I'm just eyeing this one up for when to buy it.
I would probably be a buyer just for a quick trade ahead of earnings
Yeah.
just to play the bounce. Monday morning or Tuesday morning. I mean, the stock's down about 7-8% this week. Everyone's probably pretty bearish on it because it's below the 200-day moving averages. It's below key support levels, but it is coming down into this zone here. So depending on how the retail sector acts and how the rest of the market acts, I would just play this one for maybe a couple points bounce into, what was it, Thursday's earnings, you said?
Yeah,
Yeah,
Thursday afternoon.
this is one of my favorite sort of setups for a pre-earnings pop.
And also keep in mind Costco reports monthly revenues, so their earnings usually are not a big surprise. Also, the CEO was prices writing everybody on wages. Scott saying that they were going to go to 16 an hour starting next week. So curious to see what kind of cost impact that's going to have on Costco and on the bottom line. But I think from an ESG perspective, that should offset any hurt to the margin.
Yeah, I love it. I'm probably
Yeah.
gonna go there right after the close to go buy some new underwear and some meat.
I don't even know what to say to that one there, Scott. IMAX, IMAX, reopening trade here, has not really faltered at all with the rest of the markets. This is holding right above that 20 level.
Uh, yeah, it looks pretty good. They're not open though, right? It's a reopening play, right? I don't know how that works.
It's a reopening play. Correct. I mean, I think a few are open.
I mean, Gav, I gotta be honest with you. These reopening plays, I mean, like everything from Dave and Buster's to cruise lines to IMAXs and whatnot. I mean, I've been trying to I made some good money last year in 2020 shorting them into the rallies. That doesn't seem to be the case or the trend here at all ever since the vaccine came out the last 2 to 3 months. But at the
Yeah.
same time, they're still not open.
Yeah.
And it's like, is it a sell the news now that the people are getting vaccinated and these things are going to reopen? So I'm not really sure. And like you said, are they going to give everyone a pass, for their earnings reports because of what's been going on? I don't know. I've been really kind of avoiding these whole reopening plays the last 2 to 3 months, at least, more so 2021 here.
All right. Let's see.
Looks good
Next.
technical though. It looks good
Yeah.
technically. Looks strong, but I don't know. I'm not trading them.
We got Open Door, OPEN. This is the Chamath Palihapitiya SPAC that used to be IPOB. I've been involved with this one. It's riding its 50-day after testing it a few times. We've certainly seen some of the strong numbers from a Redfin out there. Not apples to apples, but Rocket obviously had good results. But the Redfin reaction certainly wasn't all that encouraging. Now, Open doesn't have as high of a valuation or hasn't had nearly as high as a run, and does have, it's already seen a pullback of about 20% or so here, Scott. Coming into some key support levels around 26. I'm definitely going to be keeping a close eye on this one, see if I want to get involved. And if it settles, this is one that I think you can maybe also play ahead of earnings.
So is this any different from like Zillow, where you just go online and search your home?
Well, so
or
Zillow, I
Trulia
don't.
or
So
anything
the
else? No.
difference would be that you could actually buy a home and work through an agent online. I don't know if you could do that on Zillow, can you?
I don't know.
Redfin
I
you
haven't been
can,
in the
but
market for a
Zillow I
house,
thought
so
was yeah. So I mean, I guess you could group it all into that
okay.
fintech of real estate, right?
Okay.
So
So yeah, I would be a little concerned that, Redfin did sell off just recently and get hit underneath the 50-day moving average in response to that. Zillow, which was doing really well, I think they reported like 2 weeks ago, accelerated to the upside, but it's been swiftly rejected here, back to reality around the 50-day moving average around 150. Um, so this is going to be a tough call. I have not seen or used Open Door. Hence probably why I'm asking what it does. But I love the fact that it's in this solid uptrend, rising above a 50-day moving average. Uh,
primarily based in Arizona too. I should note that.
okay, okay,
It's got a very heavy West Coast flavor to it.
okay. Yeah, I mean, if this could be a lot going on. It could be a great
Yeah.
market. I don't know if I mean you hear
Well,
about
the
people.
reason why they do better out there, Scott, is because there's a lot of cookie cutter houses,
Okay,
and therefore there's not as many nuances that you might need a realtor for. Say, if you're looking for a house in the New England area or something, and you got all those old colonials.
yeah. Okay. I heard a lot of people leaving California too, so maybe that's
A lot of
good
people
boost
live in
there.
California to go to Arizona.
Or Texas and stuff like that. Yeah. So,
Yeah.
yeah, I think this looks okay above that 25 area. I would watch this one. It's not on my radar, but I'm going to start watching it.
All right, and let's see, two other names I'll just mention here. Smile Direct, which has been holding above that 11 area. I was expecting to see a little bit more weakness here. Let me double check the short interest on this SDC. Um, 24% short interest on just under 100 million float here, Scott.
Hmm. It
So
doesn't look like the worst chart in the world. I mean, it is coming back. You got this rounding bottom over the last year. Decent uptrend last couple months. I'd say it looks good above $10, Smile Direct overall. Give it some wiggle room there, and it has potential to just start breaking out over 15, 16 resistance. So I'd get that one on the radar.
all right, and then we got Smith and Wesson, SWBI. Everybody's getting their guns these days, but this has just been trading in a sideways direction really for a long time too, Scott. Now the 200's starting to come into play.
Uh, yeah. So it looks like a big turnaround play, obviously in the last year or so. Let's take a look at a weekly chart. Yeah, key support level, I'd say definitely lies somewhere around that $14 to $15 area. So overall, if you like the stock and the company, it's got to stay above 14, and then I'll give it the benefit of the doubt to get back to the upside. But I would only like it above $14. What's the other one? Ruger, RGR, all right?
RGR, yeah.
RGR. And then we have a subscriber that constantly tells us you got to buy the ammo
Yes,
stock.
you.
No, the
And
ammo.
Powell.
POW. I guess if what good is a gun if you don't have the ammo, right?
Very true.
And then what was
Oh, it's good enough to scare me off, but
uh, is
learn on
this,
PXD here as this breaks back up to the 150 area for what it's worth. A little
yeah.
big surge.
And then
Is this all the energy space that we're seeing a surge, Scott? XLE's regained nearly all its losses here. Nice move.
wow, yeah, nice bounce. Um,
Okay. And the last name I was just going to mention on Friday, Scott Hibberts. HIGB. Pretty good looking chart.
this is a sporting goods store, right?
Correct.
I've never stepped foot in one, but I guess
I don't know if there's
sports.
really too many around us.
I guess sports are coming back. I know it's various. With my children, I have some people have local leagues and community leagues that are starting up again, and then other people are complete lockdown. They refuse to even open their doors or do anything. So it's a very mixed bag here. But beautiful looking chart here over the last couple of years. Hibbets broke out back in August above that 30 resistance area, and it's just really just accelerating to the upside there. Recently, it looks like it did hit all-time highs above 70. So let me just take a look. Yeah, all-time highs above 70. So I would watch for this one on a pullback if you like the name, you like the story there. 50-day moving average comes into play around 55. which lines up around the October high there. So 55 would be a short-term line in the sand for this one, HIBB.
All right, I think that's going to do it for us then, Scott. Want to maybe take a quick pause here, stop the recording, and then we could just take a quick glance at the markets going into the close.
Sounds great. Give me 1 second. Too many windows open.